Hi, everyone. Welcome to Pennsylvania Taxes for New Businesses. We will get started here shortly. I just want to give everybody a chance to join.
Good morning. I was just stopping in because I'd heard that Rachel, Jason, and Steph were having some trouble with their Zoom link. So I just wanted to make sure, but I see they're in here now, so
Yep. Thanks, Don.
no problem.
Thanks for checking in.
Well, Alicia would yell at me if something happened. So I didn't want to save myself.
Don't want that to happen. Thanks. Thanks for your question, Josh. We are recording it right now, and I will have the recording sent out to you, to everyone, probably before the end of today, if not today, tomorrow. Okay, we're going to go ahead and get started. Sure. All right, well, good afternoon, everyone. I'm Cindy Nellis, and I'm the director here at Penn West Clarion Small Business Development Center. And we are very happy that you have joined us today. The Pennsylvania SBDC is partnering with the Department of Revenue to present a 4-part series offered monthly. Today's topic is PA taxes for new businesses. Let me switch the slide. The other 3 topics are getting started with MyPath, sales tax basics, and withholding basics. So we hope that you plan to join us for these other topics in the months ahead. Today's presentation will help you learn and understand the rules, laws, and procedures to follow as an entrepreneur and business owner. Most tax delinquencies often stem from misunderstanding Pennsylvania laws and procedures, so we will highlight some common errors, discuss income tax, sales and use tax, exemption certificates, and employer withholding tax. In addition, you'll learn some guaranteed tips for success and your rights as a Pennsylvania taxpayer. But before we get started, let me just run through a few reminders. We are recording today's webinar. That recording will be shared with you along with the presentation slides that you see. And of course, if there's anything else that we happen to think about in sending to you, we'll also send you that as well. If you have a question for me, your host, please enter it in your chat as Josh has. If you have questions for our presenter, please use the Q&A. We'll be monitoring both, and actually Rachel, our presenter today, has a team of experts here to help answer the questions while she is presenting. So there's your reminder, and then I'd like to introduce you to the Small Business Development Center as your host today. We are a grant-funded program with the mission to help businesses start, grow, and succeed. We provide education, information, and tools to help you, our business owners, make better business decisions. We spend the majority of our time providing one-on-one business consulting services and, of course, training on topics that our small business owners have requested. Our consulting services are provided at no cost and they're confidential. We offer training seminars on a variety of topics that target the needs of small businesses. And with that, to us, a small business is any business that's generally defined as a business with less than 500 employees. So our audience is pretty broad. We also use our grant funds to provide you access to database information and resources related to industry and market research, financial analysis, and implementing marketing strategies as a few examples. The Small Business Development Center partners with many economic development organizations to help connect you, our business owners, with many more resources to help you start and grow. The Pennsylvania SBDC network is made up of 15 centers, all located at institutions of higher education. We're a part of America's SBDC, a national network that enables individuals and businesses from all over the country to access our program services in your neighborhood. We're funded through state and federal tax dollars, as I mentioned, and our host institution, Penn West Clarion, is a major supporter in funding our program as well. You'll also receive these slides and a request to connect with us to sign up for business consulting services. We just ask that you do that online. We give you that link. We also have a couple of websites, my website and our lead office website, to provide you access with a lot more information and information about our program. And of course, if you'd like to connect with me, I provide you with my email address and our center's phone number and center email address. So doesn't matter where you're located, we are happy to connect with you, and we'll make sure that you get connected with the SBDC in your neighborhood. So there's no wrong door in entering our network. So today, our speaker, our expert from the Department of Revenue is Rachel Washington. She's a research analyst with the Customer Outreach Relations and Engagement Division of the Pennsylvania Department of Revenue. So welcome, Rachel. I'm going to stop sharing my screen so you can share yours. And we thank you for being here, and I'll turn it over to you.
All right, 1 second here. Let me share my screen. All right, everyone can see that okay?
I'm not seeing it yet, Rachel.
Okay. There we go. Now we should be good.
That's perfect. Thank you.
All right. So, good afternoon, everyone, and thanks for joining us today. Once again, my name is Rachel Washington, and I'm a research analyst for our Customer Outreach, Relations, and Engagement Division within the Customer Experience Center here at the Department of Revenue. So quickly, a little bit of background about me. I started as a temp at the Department of Revenue in 2018, answering customer questions over the phones. Recently, I graduated from Temple University back in 2022 with a major in post-production and essentially a minor in accounting. I've been promoted to this position where I specialize in creating the Revenue 411 videos, and I help out with a lot of other outreach and education materials that you will see here today. So I'm honored to have this opportunity to talk to you all today about PA taxes for new businesses. And in our experience, I just wanted to let you know that we have found that most taxpayers work very hard to comply with PA tax rules and regulations that pertain to their business. But we also know that tax law is not the easiest thing to understand. So our goal today is to walk you through some high-level information that you should know as a new business owner. So we're going to point out some common errors to avoid, which can ultimately save you time and money. All right, so let's get started. So this slide here shows our agenda for today. You can see here that we are going to talk about a few different tax types, including income taxes, trust fund taxes, and business use tax. In addition, we will talk about exemption certificates, great tips for success, and your rights as a taxpayer. So let's get started with income taxes. Businesses have an annual income tax filing requirement, just like any taxpayer. The type of business structure that you have determines what form you will use when filing. Sole proprietors report income and expenses using the PA Schedule C, which is the profit or loss form from business or profession. And this is for each business. So people that use this form usually are people that do not have an EIN for their business. Instead, their business is associated with their Social Security number. The owner of a single member LLC that receives net profit income reports, they report this income and expenses using the PA Schedule C as well. The owner of a single member LLC that owns and operates a rental property reports its income and expenses using PA Schedule E, which is used for rents and royalty income or loss. Partnerships, both general and limited, are required to file the PA 20S or PA 65 information returns and provide each PA resident partner with PA Schedule RK1 and each non-resident partner with PA Schedule NRK1. If the partnership is taxed as a partnership for federal income tax purposes, these businesses will have an EIN. So, in addition to income taxes, you may also have what are called trust fund taxes. Trust fund taxes are collected by the business owner and then held in trust until they are paid to the Commonwealth. There are 5 taxes that represent trust fund money, but today we're only going to focus on the 2 that will most likely pertain to your business. These are withholding tax and sales tax. It's important to remember these taxes must be reported timely and remitted in full to the Commonwealth. Again, you are simply holding these taxes in trust until you file and pay. Please keep in mind that these funds should not be used to cover business or personal expenses, and we suggest that you keep these funds in a separate account until you are ready to remit them to the department. So this slide here shows all 5 taxes that represent trust fund money. Some or all of these may pertain to your business. Withholding tax usually occurs when an employer withholds state income tax from an employee's pay and then remits the money to the state. Sales tax is levied on the sale of taxable tangible personal property and certain services. So then the next 3 taxes are mainly associated vehicle leases and rentals, as well as new tire fees, and they collectively fall under what are termed PTA taxes and fees. And PTA stands for Public Transportation Assistance. The vehicle rental tax pertains to car rentals from businesses with an inventory of 5 or more vehicles for rent. And then the tax on liquid fuels is just what it sounds like. This tax is endured by the consumer, although the distributor is liable for its collection and payment. Please note that trust fund taxes must be accounted for on the accrual basis of accounting. So accrual accounting looks to match revenues and expenses based on the business cycle of the firm rather than the actual inflows and outflows of cash. Therefore, sales tax liabilities are recognized actually at the point of sale and not when the cash is actually received. So let's dive into this a little bit deeper. So the first question we have here is, what is withholding tax? As I mentioned, withholding tax is usually when an employer withholds PA personal income tax from an employee's pay and then remits that money to the state. In MyPath, which is our customer portal, you will see withholding tax broken down by 3 different withholding types. The first withholding type is employer withholding, which applies to regular W-2 employees. The next type we have is other income withholding. This is for non-wage withholding reported on a 1099 miscellaneous or 1099 NEC. Typically, for small businesses, this applies to independent contractors. If you need assistance with determining whether an individual is a W-2 employee or an independent contractor, you will need to determine things like, is the employer being hired for a temporary project? Can they choose where and when the work is performed? Do they use their own materials for the work performed? Are they paid a flat fee or hourly rate that is invoiced? As a good rule of thumb, if you answered no to all of these questions, chances are they are a W-2 employee. If you are uncertain about whether someone is a W-2 employee or an independent contractor, you should complete the federal form SS-8 and the IRS will make the decision for you. So then, looping back to the types of withholding, we mentioned that there are 3. So the third and final withholding type is retirement withholding. This is reported on a 1099-R and applies when withholding is taken on retirement income. In the state of PA, withholding is taken at the time of retirement contribution, not the distribution, provided certain qualifiers are met at the time of withdrawal by the employees. This is most likely not going to pertain to business owners, as most of the time retirement plans are administered by a third party. So the next question is, when do I withhold? If you and your business is a sole proprietorship, partnership, association, corporation, government body, or other entity that employs one or more persons, it is required under the Internal Revenue Code to withhold federal income tax from wages paid to an employee. You are then required to withhold and remit Pennsylvania personal income tax from the compensation you pay to your employees. So, the simple answer is every time you issue a paycheck. Pennsylvania law requires employers to withhold Pennsylvania personal income tax from employees' compensation within two common cases. So when resident employees perform services within or outside Pennsylvania, and when non-resident employees perform services within Pennsylvania. Currently, Pennsylvania's personal income tax rate is 3.07%. That means you must withhold 3.07% for any employee who lives within PA, regardless of where the work is being performed. And you must withhold 3.07% for any employee who lives outside of PA if the work is being performed in our state. Okay, so when is it due? The current schedule for employers to withhold and remit employees' taxes on wage and salary income can vary. The frequency for remittance is based on the amount of withholding that is required. So, the greater the amount of withholding, the more frequently you are required to remit. So, the return should be filed every quarter for this tax, and there is also a W-2 reconciliation that must be filed at the end of the year. So I'm sure you all want to know how to file and pay in the first place. The department has a customer portal called MyPath for customers to electronically file. MyPath is an internet-based filing system that allows taxpayers to file returns and make payments electronically without cost. So it's free. Simply visit mypath.pa.gov and sign up for your user profile. The MyPath customer portal does have both logged in and non-logged in functionality, but most business tax transactions must be completed as a logged in user. Therefore, you will need to create a profile to get started. We have published several Revenue 411 videos, which provide step-by-step instructions for using MyPath. So, if you are new to this system, I would highly recommend you seek out those resources to help with getting started. It's also important to note that under regulation, any payment of $1,000 or more must be remitted electronically. So I strongly encourage you to use MyPath portal instead of sending a check in the mail to avoid any additional penalties. If you have any questions related to withholding tax and those requirements, I encourage you to check out our REV 415 Employer Withholding Information Guide for additional information. All right, so next up we have sales tax. So what is it? Pennsylvania sales tax is levied on the retail sale, consumption, rental, or use of tangible personal property, including digital products and certain services in Pennsylvania. Currently, Pennsylvania's sales tax rate is 6%. However, by law, a 1% local tax is added to purchases made in Allegheny County, and 2% local tax is added to purchases made in Philadelphia. There are some major items exempt from sales tax, which include food that's not ready to eat, candy and gum, most clothing, textbooks, computer services, pharmaceutical drugs, sales for resale, and residential heating fuels such as oil, electricity, gas, coal, and firewood. Generally, services to the human body, such as haircuts, massages, etc., are also exempt from sales tax. Additionally, permanent landscaping services, except for grass cutting, are generally exempt from sales taxes as well. So, when do I collect it? Sales tax must be collected at the time of sale unless the sale is on credit. Taxes are due on credit sales must be remitted within 30 days of the date of sale. A seller is liable for reporting and remitting taxes and fees with the tax return covering the period in which either a taxable sale was made or the tax or fee should have been collected. For those of you familiar with accounting terms, I said this earlier, but this is an accrual basis accounting. This is the most commonly used accounting method where a business reports.
Rachel, your presentation seems to be stuck on sales tax.
Oh, this is still the same slide.
Okay, thanks.
Yes, so this accrual basis accounting is used mainly for sales tax. So where a business reports income and when the expenses is incurred, as opposed to cash basis accounting, which reports income when received and expenses when paid. So just to recap, for sales tax, you use accrual basis accounting, which you report sales tax when the sale is made, not when you receive the cash itself. Okay? So we're going to talk through an example for sales tax. In August, you sell a widget for Sam for $1,000. Since the widget is a taxable item, you charge Sam 6% sales tax, which is $60. However, Sam only pays you $640 in August and promises to pay the remaining $420 in September. Under Pennsylvania law, you are required to remit the full $60 of sales tax due on the sale of the widget in August. Please be aware that a seller may be assessed for failure to collect taxes and fees, plus charges for appropriate interest and penalties. I'm sure many of you have questions about what sales or services are taxable. That's not something we're going to go over and cover in detail during this module. We do have a sales tax basics presentation that will be running in the future, or you can check out the retailer's information guide, which is the REV-717 for more detailed taxability lists. Okay, so continuing on the slide, when is sales tax due? So unlike withholding, sales tax filing frequency may vary. When you are a new sales tax filer, you are set up as a quarterly filer, meaning that your returns are due in April, July, October, and January. But your filing frequency can change. Each year, the department reviews each business that files returns to determine whether or not the filing frequency should be changed. If such a change is made by the department, the business is notified in writing. It is very important to pay attention to these notices because you don't want to be in a position where you are a quarterly filer that has been then changed to a monthly filer and you threw your notice out, so you're unaware. Okay, so make sure you stay on top of that. So how do I file? Like withholding tax, we encourage you to use MyPath for filing and paying. Again, you do have to have a user profile, so it's important to sign up before getting started. Make sure first that your business is registered with the online business tax registration hyperlink on MyPath on the homepage before creating a user profile in MyPath, okay? The department also has third-party vendors who will provide e-filing software for those taxpayers who do not wish to use the department's e-filing option. A list of approved software vendors is available on the department's website at www.revenue.pa.gov. So just like withholding tax, under regulation, any payment of $1,000 or more must be remitted electronically. All right, so moving on to use tax. Use tax is by no means unique to PA. Every state that has sales tax also has use tax. The purpose of use tax is so that Pennsylvania's businesses are not put at a disadvantage to businesses who do not charge sales tax. Sales tax is imposed on taxable goods and services at the time of sale and collected by the seller. In instances where the seller does not charge sales tax on taxable items, the purchaser is responsible for remitting the tax on their first use. This is use tax. Use tax exposure occurs most often when a business buys taxable goods over the internet or through the mail, and then the seller does not charge PA sales tax. In these cases, the purchaser must pay their use tax obligation in the month following the month of receipt in PA. This is also true for purchases a business makes while out of state where no sales tax is charged. The items become taxable upon delivery into Pennsylvania. The department's audit experience shows that most businesses owe use tax, but many do not pay use tax. It is estimated that upon audit, 80% to 90% of businesses are found to owe use tax. Okay, please be aware that use tax applies to individual customers as well, so this is not just for business taxes. We do have a use tax voluntary compliance program, which allows you to go through your records and voluntarily come forward to pay any use tax liabilities. Maybe you never heard of use tax before, or maybe you just didn't realize no sales tax was charged. But rather than wait until we audit you and charge additional fees, you can self-report any delinquencies, and the Pennsylvania Department of Revenue will waive those penalties. These penalties can range from 5 to 25%. Okay, so how do you file and pay use tax? Any business that incurs use tax liabilities on a regular basis is encouraged to register for a sales use tax account. This can be done via MyPath. If you are already registered for sales tax, then you can actually file any use tax due along with your sales tax return. If the sales tax return is filed timely, then the use tax is considered timely no matter what filing frequency your business is on. If you are not required to be registered for sales tax and you have a use tax liability that needs to be paid, you may still file the use tax return and pay electronically via MyPath, but you will submit the filing right from the MyPath homepage. This means you do not have to log into your user profile. You will simply visit mypath.pa.gov and click on the hyperlink that says File a Use Tax Return under the Returns panel. Okay. So while the sound of filing and remitting use tax might seem unsettling, remember that our education and enforcement of this tax may help level the playing field for your business. So without our efforts, PA businesses operate at a 6% disadvantage to online and out-of-state businesses. All right, so for example, taxpayer A opens a kitchen supply business. As part of their business, they need furnishings for the business office. They pursue different quotes to get the best deal. In the first instance, they get a quote from an out-of-state seller who can ship the goods into PA via third-party freight. The out-of-state seller is not required to charge sales tax. In the second instance, however, the taxpayer gets a quote from a PA business that, by law, must include sales tax. On first glance, it looks like the better deal is with the out-of-state seller. You can see right here. Many taxpayers would think, would think that, and then make the purchase resulting in a lost sale from the PA business and lost tax revenue to PA. However, when applying use tax, the out-of-state seller purchase price actually becomes $10,706. So when tax is calculated, it's actually the PA business that has the better deal. So that's the true purpose of use tax, to keep PA sellers from being undercut by out-of-state sellers. Sales and use tax would not apply on products purchased if you are selling to a customer intact. All right, so now I want to take a moment to talk to you about the Pennsylvania Exemption Certificate. This is also known as the REV 1220. This exemption certificate is used by a purchaser and seller to document the reason for a sale of taxable property or services where tax was not collected. If properly completed, and when accepted in good faith, the REV 1220 will relieve the seller from the collection of tax. Exemption certificates are required to substantiate all exempt sales with the exception of the following. So sales to governmental entities, sales of non-taxable tangible personal property or services, and sales where delivery is required to be made outside of the Commonwealth. Okay, so there's a couple important reminders that you need to know about the PA exemption certificate. The first is that there is not a generic business exemption. Many people think that just because they are a business, they are tax exempt. However, when completing the form, the reason for why the property or service is exempt must be filled out, and it must be signed and dated by the purchaser or lessee in order to be valid. Sellers should also be aware that a hard copy exemption certificate must be kept on file by the seller and should show both the front and back pages. Documentary evidence must also be retained by the seller on these transactions. We suggest that you staple a copy of the sales receipt to the exemption form. Please note that upon audit, you can be assessed for sales tax not collected based on an invalid exemption certificate. So now I'm going to talk to you all about some tips for success, resources that the department has to offer, and the rights of both taxpayers and the Department of Revenue. The first tip for success is to maintain adequate records. A question that all new businesses have is, how long do I need to keep my business and tax records? There's no clear answer to that question since each business is different, but I will provide you with some general advice. Most of the time, the answer is going to be 4 years, which means the current year plus the previous 3 years. For payroll, you will want to keep complete payroll records when showing the proper withholding and remittance of Pennsylvania personal income tax and wage expenses for at least 4 years. For mortgage, capital asset, and investment records, you will need to maintain those documents throughout the life of the obligation, as they will be used for depreciation and cost recovery calculations. For purchases made during the tax year, you will want to keep records that will help to document current assets, inventory, and claimed expenses against income. Again, these need to be kept for 4 years. You also need to keep records of any sales tax paid by you at the time of purchase or use tax paid by you as needed. If you operate in multiple states, you will need to keep detailed records of Pennsylvania sales as well as detailed records for every other state where you do business. You will want to keep a file of all exemption certificates and write the transaction number at the top to make it easy to find in case of an audit. Additionally, as we mentioned, it's a good idea to staple the sales receipt. If you do this, you will actually have that transaction number and all the info you need right there. While we can't recommend any specific products to use for record management, we will let you know that there are various software products available that will help you to keep your books and records in proper order. If you have a smartphone, we also recommend that you download a free scanner app that will allow you to use the camera to save PDF copies of receipts when you are traveling. So, the next tip for success is to keep your address up to date. We're going to talk about address updates, and we know there are some of you who are going to think, gosh, who cares about that? This may seem minor, but it is often overlooked and important to help us communicate effectively with you. Many taxpayers actually get behind in their tax obligations simply because they are not receiving correspondence from the department. Usually because the items were sent to an old or wrong address. As I mentioned when talking about sales tax, every November, the Department of Revenue reviews the amount of sales that an entity has. They may determine that your filing frequency needs to be increased and bump you up to a monthly filer instead of a quarterly filer. This is because you have had an increase in your sales volume. However, in this case, if your address is not up to date, you may not have known that you are now a monthly filer, and if you file by the quarterly due date, you're now delinquent. So, delays in correspondence about overdue tax liabilities extends the time it takes to resolve them and causes additional charges like interest, penalty, and possibly collection agency fees to accrue. You can easily update your address and other information through MyPath. So once you're logged in, you go to the More tab, and then you find the Names and Addresses panel. And then from there, you click on the Manage Names and Addresses hyperlink. There, it will take you to a page to manage your updates. For assistance, please see our Revenue 411 videos, which can be found on our website at revenue.pa.gov/videos. I highly recommend them. Okay, so the next tip for success is to file and pay on time. For income taxes, this is generally a once-a-year event for you or your business. But I can't tell you the number of times we've heard someone say, I forgot they were due. Failure to file and pay income taxes or estimated payments due can actually result in penalty and interest charges. So another cool feature on MyPath is that you can actually set up due date reminders for all your tax accounts to ensure that you are compliant and with your filing and payment deadlines. So for trust fund taxes, due dates vary depending on the amount that you are regularly collecting. So please be sure to educate yourself on your business's filing and payment frequencies. There is information on our website pertaining to both withholding and sales tax obligations. Again, the department applies penalties for late filing as well as late payments. So be sure that you are properly submitting everything. The next tip for success is to have separate bank accounts for trust fund taxes. We recommend that you keep a separate bank account to hold trust fund money and to pay the tax due. If you don't keep them separate, you could end up spending the trust fund money and then not realize you're doing it. In general, it increases the chance of misusing the tax money if you don't have them separated, so please do that. As mentioned earlier, you cannot use trust fund money for business or personal expenses. It is important to know that using trust fund money for anything can be considered a criminal offense. All right. And our next tip is to take advantage of our electronic services. So this is the fastest and most effective way to get things done. Back in March of 2020, when everything was shut down due to COVID, there was like nobody in the office to manually process items. So using electronic services ensures that everything keeps moving, even when you take the people out of the process. I've already talked about some things you can do through MyPath, but there is so much more. I encourage business owners to schedule due date reminders so that you receive a notification when filings or payments are due. Use MyPath to view, save, or print notices. Request an electronic statement of account, which actually allows you to see how payments are applied and what credits you have sitting on your account. And make electronic payments. As mentioned several times in this presentation, payments of $1,000 or more must be made electronically. Otherwise, there's actually an electronic funds transfer or EFT penalty applied to your account. So the best way to avoid paying the EFT penalty is to pay electronically or even pre-scheduling automatic payments. The department does have instructions available for each of these services on our website and many Revenue 411 videos available to help you walk through this process. And so our final tip is to safeguard your data. As a business owner, it is important to protect your data and confidential information at all times. So let's go over some tips to help ensure your systems are secure. Install anti-malware, antivirus security software on all devices, which includes laptops, desktops, routers, tablets, and phones, and automatically update the software. Use strong passwords of 8 or more characters. Use different passwords for each account. Password protect wireless devices, and consider a password manager program. Encrypt all sensitive files and emails. Back up sensitive data to a safe and secure external source that's not connected to a full-time to a network. Make a final review of return information, especially direct deposit information prior to e-filing. Wipe clean or destroy old computer hard drives and printers that contain sensitive data. Limit access to taxpayer and employee data. Check the IRS e-services account weekly for a number of returns filed with FEIN. If you or someone affiliated with your business feels like they are a victim of fraud, please contact our Fraud Detection and Analysis Unit. They are here to help you in these situations. So now that we've reviewed some tips to help you be successful, let's go over some resources that will also help you achieve success. So a lot of people ask where they can get useful tax information. The first place I would recommend is visiting our website at revenue.pa.gov. This slide shows what our homepage currently looks like, but we are always making updates, so it is subject to change in the future. Currently, a lot of the information you need is either at the top toolbar or on the icon belt down on the center of the screen. From the top toolbar, you can easily navigate our online services, forms and publications, get assistance, and obtain other general tax information. The middle icon belt provides access to our most popular services. You'll see MyPath, Make a Payment, Where's My Refund, PTRR, and Customer Service. Additionally to those Revenue 411 videos. Our website is actually compatible with all devices. So for example, this is the mobile view, meaning you can access it anytime and anywhere, even from your smartphone. Usually, when people are visiting our website, they have a specific question in mind. So let's talk about how you can use our online customer service center. First, you will want to click either the image at the top of our website where it says visit, or select the icon in the center that says customer service. Once you click the customer service icon, you will type in a question or term and hit search. Any frequently asked questions relating to what you entered will populate. The Online Customer Service Center contains answers to thousands of commonly asked tax questions. So, we definitely recommend you check this resource before attempting to call or email. If you have a tax question that is still not answered, you can submit the question directly to us. To do that, you will click the top bar that says Submit a Question. It's right up here. This does require you to create an account. And once you're logged in, you have access to over 30 categories that let you direct your question to the proper place. Just a reminder, search for what you need first before submitting a question. Our FAQs are all vetted through the department's subject matter experts before they are placed online. So if you can feel confident, you can definitely feel confident that you are getting good answers. Once you have submitted your question, you will immediately receive a confirmation notice, and an individual specialized in that area will respond within 72 hours. If you would like to actively talk to a representative on the phone, you can contact the department's Customer Experience Center, which is available Monday through Friday from 8 a.m. to 5 p.m. Our representatives in the Customer Experience Center are trained to handle almost all calls for the department. So should you need face-to-face customer service, you can actually visit the district office closest to you. There is a list of the district offices and their contact information available on our website. We do recommend that you call ahead to make an appointment before visiting one of the district offices. So, last but not least, let's review what your rights are as a taxpayer. So we have recently revamped our Taxpayer Bill of Rights. Pennsylvania has a Taxpayer Bill of Rights that ensures equity and fairness in the tax administration and enforcement. The Taxpayers Bill of Rights sets for uniform procedures so that the Pennsylvania Department of Revenue treats all taxpayers equally and fairly. As a taxpayer, you have access to the following guarantees. The right to quality service. If you ever feel that you do not receive this type of assistance, please share your experience by visiting our website and completing our customer service feedback survey. The right to be informed. Taxpayers have the right to be informed and receive clear and easily understandable communication from the department. The right to confidentiality. The department will not disclose taxpayer information unless authorized by the taxpayer or by law. We take confidentiality very seriously. The right to retain representation. Taxpayers have the right to retain an authorized representative, such as a CPA or an attorney to represent them. And additionally, the right to challenge the department's position and be heard. Per your right to challenge the department's decision and be heard, you can file a petition to the Board of Appeals, but it is important to know that there are appeal timeframes which will need to be followed when petitioning the board. The general timeframe to file an appeal with the Board of Appeals is 60 days from the mailing date of the assessment notice. If a taxpayer is not satisfied with the decision of the Board of Appeals, they may file an appeal with the Board of Finance and Revenue. The general time frame to file an appeal with the Board of Finance and Revenue is 60 days from the mailing date of the decision of the Board of Appeals. So, to appeal that decision, a taxpayer may file with the Commonwealth Court of Pennsylvania within 30 days of the mailing date of the decision from the Board of Finance and Revenue. For specific appeal timeframes for each tax type, refer to the REV 460 and REV 1799A. So, we discussed the rights of taxpayers and their representatives. Now, we will review the department's rights. Earlier, we talked about record keeping. This ties into the department's right to audit. Keep in mind, we do not perform audits just to find out what businesses are doing wrong. It's more of a standard business practice to ensure that everyone knows how to do things the right way so that all businesses are treated equally. Anytime an audit is conducted, the department will provide the taxpayer with a complete explanation of the audit findings for that individual taxpayer and their rights during the process. So again, if you do get in an audit, or if you do get an audit notice, don't be alarmed. This does not mean that you did something wrong. Audits are standard business practices of the Commonwealth. Okay, so please keep in mind that we're having this session today so that you don't land here. We want to let you know that the department does have these options, but we are trying to help you avoid any further enforcement. If you do not file a return, pay the tax due, or file a timely appeal for a tax balance, the department does have the option to use the tools listed on this slide. The left side of the slide shows some of the more common enforcement tools. The right side of the slide includes tools we use when we receive little cooperation from taxpayers. Again, our goal in inviting you here today is to help you avoid the scenarios where these tools are used. Now, you may wonder why we have a second slide on enforcement. Once again, trust fund taxes are treated a little bit differently. So, failure to timely collect and report sales tax money can lead to civil penalties equal to 50% of the unpaid tax and criminal penalties for theft, embezzlement, or misappropriation of government funds. This, in addition to standard penalty and interest. So this is an example where the cost of non-compliance is actually higher than the cost of compliance. So please keep in mind, there's something unique to trust fund tax liability, and that is the fact that it attaches to the responsible party. The law says that the liability is enforceable against such person, his representatives, and any person received any part of such fund. On a practical level, this means that an owner of a limited liability company that goes out of business with unpaid trust fund taxes remains liable for those taxes. The ability doesn't go away with a defunct business. That means that the department will pursue collection against the individual using all available enforcement tools, including liens. Again, we don't want you here. We are meeting today to help you understand your responsibility so that you do not get here. Okay, so previously we talked about protecting yourself so that you do not become a victim of fraud. But this slide is telling you what to do if you suspect someone else is reporting fraud. Tax evasion is a crime that hurts all Pennsylvanians because when taxpayers don't pay their fair shares, it decreases the revenue available to fund essential state programs and services. So if you suspect tax fraud, report the activity directly to the PA Department of Revenue, including as much detail as possible. You can use the contact information listed on the slide, or you can just go to our website, type fraud in the search box, and report suspected tax fraud activity will pop up. If after listening to this presentation today, you find yourself thinking you may have a tax requirement that you were not aware of, we do have a voluntary disclosure program, often referred to as VDP. The program was created for individuals and businesses that have not met their tax obligations because they were not aware of them. The department's liaison officer will work to make sure that all of the taxpayers' filing and payment requirements have been fulfilled. There are incentives for coming forward. So in return for their voluntary disclosure, filing their tax returns, and clearing their tax debts, taxpayers are only responsible for the payment of tax and interest. Penalties for all taxes administered by the PA Department of Revenue will be waived when the requirements of the voluntary disclosure agreement have been completed. It is important to know that the program is only available to those taxpayers who are not registered with the department and for which no investigations or collection actions have begun. And of course, we want you to know that we have several social media platforms. We generally use these outlets as a means to push information to taxpayers as well. We will post tax law changes, fast facts, events, and anything new that is going on with Pennsylvania taxes or the Department of Revenue. Okay, so the REV 588, the REV 717, and the REV 415 are staples for all new businesses. They provide a lot of good information for getting started. All are available on the department's website under Forms for Businesses. So finally, this concludes our presentation for the day. We want to thank you, and we want you to know how much we respect your desire to have a successful business enterprise in the Commonwealth. And as such, we are here to help you in the best way we can. Your success is our success. We hope you have found this presentation informative and helpful, and best wishes to all of you this year. Are there any questions for us at this time?
Wow, Rachel, I haven't seen very many questions, so you've done a great job today. We do have one. It says, what were the REVs again? The three that you just mentioned.
So here they are. They are the REV-588. Okay, this is for starting a business in Pennsylvania. The other one is REV-
So that's REV 588.
Yes. REV 588 is this first one.
And then the sales and use tax is REV 717.
Yep.
And then their employee withholding is REV 415.
Correct.
Great. Okay. And Jason, thanks for adding them in there. Okay. So Haiti has a question. Haiti, do you want to be unmuted? You can just mention that in the chat and I can unmute you if you want to answer it live. Michelle asks, I started my business in June of 2023 and my CPA has stated that I don't need to file taxes until April 2024. Is that correct?
Which are their employers? Like, are there employees for this business?
It would be a business owner. She started in June 2023 and she stated that she doesn't need to file her taxes until 2024, which is correct because she would basically be filing taxes for 2023 by April 15th of 2024.
Mm-hmm.
So I'm basically answering the question.
Yeah.
And then Michelle, if you have, oh, okay. So she then went on to say she had mentioned quarterly taxes. So that's a question for you, Rachel. So I know income tax wise, she doesn't have to pay income taxes until April 2024. You can walk her through quickly the aspect of quarterly taxes.
Okay, so for employer withholding, you have to pay quarterly beginning when you start paying your employees. If it's for sales tax purposes, you begin paying for sales taxes quarterly once you're registered. So the next quarterly payment is when you will have to start paying for that period. So even if it's part of the period that you were collecting taxes for, you still have to report it quarterly for sales taxes. Does that make sense?
Okay. Michelle, you can answer that. And then I am sure, okay, so Haiti. Michelle, I don't want to, if that answered your question, that's great. If not, if you can ask a follow-up question, that would be great. And then I'm going to have Haiti open up or unmute and go ahead and answer or ask your question.
Hi, thank you. I have a question in regards to the form 1715. I read somewhere that I need to ask my purchasers that are exempted of paying taxes. I have a university that is tax exempted and they're my customers. So I read that I need to ask them for a signed form 1715 in conjunction with the form 1220. That is the Pennsylvania exemption certificate. Is that correct? Do I need to ask for the 1220 plus the 1715 or just the 1220 it's enough?
So usually in this instance, I see that you mentioned that you're a signage company. What they can do is they can just file the REV 1220 and then they can set it up as a blanket 1220. So then that way when they make purchase, and then you can keep that on file. So then that way when they make purchases from you, that 1220 should work.
Okay, so there is no need for the 1715. That is the exempt organization declaration of sales tax exemption. What I read is that I need to ask for both, but I am not sure. I have been asking them to sign both, but I just want to confirm.
I had to refresh myself
correct.
on
So
this specific
let
one.
me just jump in, Rachel.
Thank you.
So my advice to you is if they're claiming the exemption as part of what they filed for the 1715, that just ask them for a copy of it and attach it with your completed 1220 and keep it in your files just in case. That's just cautionary. If they don't give you the 1750, you can rely on what they presented on the 1220, but you know, it doesn't hurt to ask and have a copy in your files in case you are audited, you know, about the transactions. That would be my advice to you.
Okay, thank you.
You're welcome.
Thanks, Haiti. Rachel, we have a question from Africa. What is the right way to handle the situation when you have collected some sales tax, but you have paid more sales taxes to purchase items for producing them?
So you're collecting, so what do you mean when you're collecting?
So maybe what is the right way to handle the situation when you have collected some sales taxes, but you have paid more sales taxes to purchase items, probably when producing them?
So so you can purchase with the REV 1220 for sale for resale, depending on what you are purchasing is. So you can, if you are purchasing these items to resell them as something else, you can provide the person you're purchasing these items from with an REV 1220, and then you would still have to collect and remit sales taxes because that way sales tax on that item would not be charged twice. But there's very specific specifications with a lot of that. So my advice to you would be to go in and use the online customer service center and submit a question through that with more specifics.
I know that Stephanie is answering Shamori's question. Does anybody have any other questions? Okay, we have, Jared has a question. We sell to education institutions that are always tax exempt, both inside PA and across the country. Should we be charging them use tax?
Use tax is only charged like if you are the one purchasing something from, if you are purchasing something that's being used in Pennsylvania. Sales tax is the reverse of that. So sales tax is when you would charge the Pennsylvania sales tax, and which would then be used in Pennsylvania, if that makes sense. So when you are selling to institutions that are always tax exempt, you would, if they are able to provide you with proof that what they are purchasing is used specifically in what they are tax exempt for. So if it's education, if what they are purchasing is specifically used in education, then you don't have to charge sales taxes for that. If what they are purchasing is not used in education, then you actually, even though they are tax exempt on some things, they're not tax exempt on everything. So then you would have to charge sales tax. So that depends entirely also on what you're selling.
Okay. And Jared, if that doesn't answer your questions, you can pose another one. I believe we answered and all the other questions. So your team of experts are definitely doing their job today. So we have someone who has a question. Hold on one second. Okay. I will open it up. You can ask your question if you'd like. Cosette Lee.
Yes,
You'd like to-
hi. Thank you for all
Yes.
this information. It was so helpful. I don't think the person understood my question. I'm going to start my online business in April. I really probably will not have sales before December. My question is, so I have to still quarterly file? And they said something about a zero return. I'm not understanding that. So I do have to file, but I had zero sales is what I do. Is that what they're telling me?
So if you are set up in MyPath already and you're registered and everything's set up, you do have to file zero returns even when you're not making sales, if that makes sense.
Yes, thank you.
Mm-hmm.
And
And
just
then-
to expand on that, if you do not file those zero returns, we will look at those as a return not filed. And then it will kick into our collections process, what we will call our collections process, where we will then start sending you notices asking for those returns. So as Rachel said, just file the zero returns until you start to have sales, and then file your returns with the income reported.
Thank you.
Any other questions? One thing that I've learned over time is once registered with the Department of Revenue, it's just stay in contact with them and file your quarterly reports or file the reports as timely as it's required of you. I guess that's a pretty broad statement, but still very important as a reminder.
Cindy, I will wholeheartedly agree with you and state that that makes a great closing if no one has any other questions.
Okay, well, I appreciate everyone's time. We did want to stick around. Oh, we have one more question from Haiti. I understand that there are other taxes to file in March before personal income taxes. Can you address that, Rachel?
So that's usually the first quarter when it ends. So that's the end of the first quarter, and then from there you would file that in April.
Okay.
And that's
So we don't,
that's for
go ahead.
both withholding and for sales taxes, if you're filed quarterly for sales taxes, if that makes sense.
So there's sales tax, quarterly taxes and income tax.
Employer withholding is quarterly, yes.
Yes. Okay. Rebecca has a question. I sell art through a gallery and they charge the sales tax on the painting. Then they send me a portion of the sale as my income. How do I show that taxes were paid by them? Oh, Stephanie is answering that. And I am sending a recording of the presentation as soon as it's ready to go, and I'll be sending the slides as well. Okay. I'll let Stephanie finish with hers. John asked, my customer provided a form 1220 for tax exemption. Does that ever expire?
So the revenue 1220, depending on whether or not they made it a blanket one, which is one of the selections at the top of the Rev 1220, it's either lasts for the specific purchase, or if it's a blanket one, it's for future purchases. If there's a time frame, it's at the top of the page. And that's usually, like I said, it's mainly for one purchase. And that is accepted in good faith.
Okay, and Rebecca asked, do I have to pay withholding if I am a single person LLC?
If you do not have any employees, you do not have to pay withholding. Unless you have a 1099. So like if you're paying for, if you have like contractors that you're giving them issuing 1099s to, then you would have to set up an other withholding account if you are withholding Pennsylvania state taxes on those 1099s.
Great. Okay. I think we're going to end it there. Thank you so much for all of your questions. Thanks, Rachel, and to your team for sticking around and getting so many of the questions answered. We appreciate it. And we'll look forward to having us join next month for sales tax basics. And I'll be sending information out about how to register for that if you haven't already. So thank you so much for being with us today, and we look forward to seeing you again. Have a great day.